Hi everybody, how are you today? It's Friday, July the 5th, 7:30 p.m. UK time. It's 2:30 p.m. here in Orlando, Florida, where the temperature is a balmy 34 degrees centigrade, sweltering hot. Welcome to the new world that is warm. Anyway, hope you are having an amazing week. Yes, we are here on a Friday, normally here on a Thursday, but yesterday was July 4th, which is the great American holiday, the great American Independence Day, which brings a lot of joy to the Chinese manufacturing world of fireworks because they get to sell hundreds of millions of dollars worth of fireworks to the American public who like to make things go boom to celebrate independence. So that's why we're here on Friday, July 5th. Don't plan on being here for a super long time, but we'll see how that goes. A couple of dates to keep in mind. July 18th. I think I got that right. Is that right? July 18th? Let me check. July 18th. Anyway, Loan Pad. Louis Schwartz will be here. Yep, July 18th. We've got, we're going to be having Narinda Couture from Cufflink coming on probably the end of July, and then in August we got Peter Reed from Assets Capital coming. I don't know exactly what day, but that's going to be coming soon. So keep posted if you like to hear from these people live. They are going to come here live, so we are going to talk some. What are we going to talk about today? We're going to talk some. We're going to talk some Lend Invest. Got an interesting email about Lending Invest, and we're going to take a look at one of their projects that they put out a video for, Shojin. Also, let's see what else is open on the tabs. We're going to talk about Vanguard, what's going on with the U.S. index tracker. Made a new trade today on Trading 212. I'm going to show you what we added to the portfolio. So a bit of everything, a lot of tabs open. I don't know if I'm going to get to them all. But anyway, quick word to our sponsor. No, I keep pressing the wrong button. Cufflink. Thank you to Cufflink for sponsoring the stream. Of course, you can earn up to 10.25% gross interest per annum. Over £330 million invested since 2016. And 0 investor losses to date. Your capital is at risk. Please invest wisely, and remember, don't invest unless you're prepared to lose money. Please check rates on Cufflink's websites as interest rates do change. You can sign up at the link below or go to join.cufflink.com/financial-thing. So yes, Friday stream. Holly is here having a snooze, ready to learn all about the finance world, right? Hey, there you go. Yes, she is. Thanks for joining. I hope you're having a wonderful week. Patty in France is here. Dave Dawson in Staffordshire. Peter Vince in Leatherhead. Grey and damp outside. Stephen Hale in a cloudy Nottingham. And Mike in a miserable Sutton, Southampton. I'm getting a little bit of a wet and not good weather vibe in the UK after the hot weather. Let's jump right into things. And I need to put my headphones in because I'm going to play a couple of videos today. And the first one is a little project update. I like to show these videos because I think they're ones that more peer-to-peer companies should be showing, like progress reports. And I think it's pretty cool that they do it. So this is a development case study video that Lendinvest put out for a place in Merton. Let's have a quick look at what they actually funded there. Hopefully you can hear this. It's just music anyways. Take a closer look at a project Lendinvest recently funded in Ashford, Kent. The scheme developed by the Merston Group. Very nice. I like the lawn. It's very green. Looks like a nice project. So they gave him financing to get out of that previous lending with another lender. The houses are now complete and on the market. So that's just one example of a project that LendInvest puts out for investors to be able to submit money to. And quite fittingly, I just had an email from the mailbag. We're going to go right into that because it fits with LendInvest. I'll show you this email. Lawrence, I just recently discovered your YouTube channel. Seems like you are open to questions, so here goes nothing. Yes, I don't mind questions. I think questions are always a good thing. I'm only 23 years old. I am beginning my investment journey. I've been looking at LendInvest. I think they meant to write LendInvest. As one of my coworkers told me about it, he's been investing for a few years. The thing is, it seems like they only pay about 5% in interest per year. I don't know, some typos going on there. The state of the youth today. Is this really going to make a difference in the long run? 5% doesn't seem like much, and it feels like I'll never get ahead. Any advice you could provide would be really helpful. Thanks. Jack. First of all, Jack, you might want to do a little spell check on your emails. But yes, Jack, you certainly bring up a good point, and LendInvest does not pay a very, very high interest rate on the loans that they offer to people. And also just a letter of note that technically LendInvest is not peer-to-peer lending, because you are actually lending money to LendInvest themselves. So just keep that in mind. It works a little bit differently, but it is one of the, I would say, more stable investment companies that does property-backed lending in the UK. Now, your question about 5%. Well, I think the key here is the time that you invest. And 5% may not seem like a lot in the short term, and it certainly isn't going to move the needle if you're investing £100. At the end of the year, you would expect to have £105. So it certainly doesn't seem like much, but the key is leaving this money invested for a long period of time is really what's going to move the needle for you. And I'll show you my own LendInvest account. I don't have a ton of money invested in LendInvest, never have, but what I did do is throw £500 into the account in, let's see, it would have been October of 2016. So we're talking about 2016, 8 years ago now, 7.5 years ago. And I just left it there and didn't change anything about it. I put it on the auto invest, just let it sit. And I didn't even barely ever log into the account, to be honest, because it's not a significant amount. I don't add anything to it. So I'm going to show you. I just logged in because you asked the question, and I thought this would be good to show you an 8-year case study of what happens when you sit and do nothing. So there you go. Total invested right now, £695 and 15 pence, an average rate of 5.73%. Again, this is completely on auto lend. So that has moved the needle a little bit. So what are we talking? £195 and 15 pence in interest from just letting the investment sit using compound interest. And, for people that want to invest more than what I put in, it's really not a bad thing. Not financial advice, of course. I just want to give you a case study of what LendInvest can do for you. I use the auto invest. You can see here the criteria I use: all funds, £50 maximum. Prefer to go for the tranche A loans, 65% maximum loan to value, no minimum interest rate, and you can change that criteria around as you see fit for yourself. Now, if we look at a percent calculator, so we've made about 39% over 8 years, which is a little bit more than 5% a year. So not bad. I mean, for doing nothing. Of course, this is gross of taxation, so you do have to pay tax on your gains. So do remember that. But I just want to show you this compound calculator if you are watching this in the future, Jack. If you just put a £1 investment in, now you're very young at 23 3 years old, you have all the time in the world. So if you put £1 in now, and you're able to get that lend invest return of 5.73%, and you let that pound sit for 30 years, and you add £1 a month for the next 30 years, this is what that would give you: £954 and 27 pence, just off £1 and £1 a month. So it's about obviously £12 a year. If you add, do that, at £100 with £100 minimum investment at let's do the exact rate, 5.73 over 30 years. Does that move the needle for you? So it's £95,972. And this is the power of the compounding interest that you can get from not only peer-to-peer lending companies, but also buying equities, using savings accounts. And it can really move the needle for you financially. It doesn't seem like a lot, right? It's £100 a month, which I think most people can do at some point in their life. 95,000, so after 30 years, and you have that luxury of time ahead of you since you're young. So I would say just get started. The most amazing thing you can do is start when you're young. I've been very happy with Lend Invest. I haven't had any any difficulties with the investment, even though my position is really small. I'd say it's probably one of the smaller positions I have within property-backed lending. But yeah, I mean, it doesn't have to be Lend Invest too. Just because your coworker says that's the one he's been doing doesn't mean that you need to. You have plenty of other options that pay also more than 5.73%. So I think it's a good place to start. And I would say, even though the interest rate seems relatively small to you, do it over a long period of time, and you really will move the needle on your financial life a lot. Moving on. Another company too that sent out a video that, again, I thought this was a really great video. This is from Shojin. It's a property update on one of their investments, which is Narrow Cliff New Key, which you can see, it's down here. And if we click on this, oh, we got an error. Probably because I have to log in. Let me log in. Hang on 1 second. Let's go ahead and look at that project. It's actually a really, really nice project. Now, again, not financial advice. I don't invest money through Shojin currently. But you can see here it's paying 18% projected returns annualized. They have a funding target, which it's been funded, this project. So initially it was 2.42 million was the funding amount. A lot of good information. On that page, you can see what the project is going to look like when it's finished. It actually does kind of look like that. Sometimes these artist renderings on these flats can be a little bit different to the way they actually turn out. So let me show you this video.
Hi everyone, I'm Sam from Shojin. I work at the origination team. We're in Newquay today. We've just landed from Stansted Airport, which took 1 hour, and it's now a 20-minute car ride to the site to see how the progress is getting along with the construction. So come along and have a look.
Thank you. We'll come along. Nice building. Steel. Look at that steel frame.
So we're here on site with Zach, the project manager for 14 Narrowcliff. He's going to give us a quick update on the construction works for the past month and what's coming up in the next month.
So we've had the steel frame which is going up, we've got the decking that is being released for next Monday, we've got the packs on site, we've got the scaffold staircase, so we've got the access up to all the levels, and the edge protection, and then the guys are obviously working along, carrying on installing the steelwork, and then all the foundation pads, all the external balconies have been completed.
Yeah. So what's coming up next quarter? So next month. So the steel frame will be complete, and
so the steel frame will be complete, the decking will be complete, and then we'll be looking to see bathroom pods and facade systems on site.
Okay, nice. Sounds great. Thanks, sir.
It's a nice project. I mean, this is.
So we've just left the site, and while we were there with Zach, we had a discussion on the exit process for Shojin investors. and there's been 3 units that are now under contract for sale, and there's an investment firm who are interested in bulk purchase of some of the units. And it's for a very good reason, because the site has uninterrupted views of Tolcombe Beach. And if you pan over to the left-hand side, you'll be able to see Newquay Harbour, which is in front of the town centre, and you can see the Headland Hotel at Fistral Beach. So now that we've seen the...
So there you go. That's a real-life example of where you can actually see these projects and their building progress, which I think is super cool. I'm going to take these headphones off. Because I've had emails from people saying, "Oh, peer-to-peer is a big scam. These buildings, blah blah, they're not even being made." Well, there's a perfect example of a project that is actually underway and does look like somewhat like the artist renderings have shown, and there's been really big progress made. It's quite an impressive development. So, yeah, I would encourage you, if you get those updates and you are investing through these projects, just watch those videos and keep an eye on the projects. I think is a good thing. If you live down in Newquay, go down and oh, he's a very serious guy, that Sam, what was his name? I don't know. Very serious guy. But I'm actually surprised that they were able to get planning permission through for that building, because it does not look anything similar to the other types of sort of old school. You're right there, these older school Newquay buildings that are there, but they managed to get the planning permission through, and the project is on its way. Another email today. Actually, this was from July the 1st from Tim in Glasgow. "Hi Lawrence, hope you're well. Been enjoying the live shows." Thank you, Tim. "I've never invested in peer-to-peer before, but I've been lurking on the forums. One of the complaints I often read about is the lack of available loans to invest in. Not being familiar with all the companies you discuss and speak about, do you think this lack of loans will continue to be a problem? In other words, is it worth me trying to invest in peer-to-peer lending at the moment?" Cheers, Tim in Glasgow. Yeah, I mean, we talk about what's known in the peer-to-peer industry, Tim, as cash drag. That's basically when you deposit money into an account on a peer-to-peer lending company and then there aren't any loans that come up, or what's normally the case in the more popular peer-to-peer lending companies now is if you're trying to do manual lending, which I don't necessarily suggest for someone who's a new beginner. I think auto lend is a better option, but if you want to try to do manual lending, it is more difficult to grab loans because of their popularity, and they can be gone in literally just a couple of minutes or even sometimes a few seconds, because everybody's clicking and trying to pick up those loan pieces. However, nothing remains constant in the world of investing, and there are things that are available through the companies that we do talk about. You just have to either, number one, use the auto invest, or get lucky, or just keep your eye on things, which can be quite time consuming. But I was just taking a quick look at some of the investments. For instance, if you go to Cufflink's website, you can see that there are a few manual investment products that you can pick out. So not necessarily such a big problem with cash drag in Cufflink right now. So you can see everything from the top down to Oxford Road, different tiers of loans, different interest rate offerings. You can also try their secondary market too that they have. Sometimes there's things on the secondary market. Also, Invest and Fund, for instance, has one coming up in, you can see bidding opens on 8th of July. Don't know what's going on with this picture of this crazy looking unfinished room with a very blurry picture. Again, not financial advice. I'm not saying these are loans that you should invest in. I'm just showing what's available. This is a total facility of 4.3 million. So there's probably going to be quite a lot of availability through Invest and Fund. Assets Exchange, they send out a newsletter every month and they show what the property pipeline looks like upcoming, and this letter has quite a few different options showing what is going to be coming up. They've got, let's see, the Let's for Life property in Sheffield, one of a small portfolio of properties we have agreed to purchase over the upcoming months from our development partner. So they got that. They're working on this HMO license for a 6-bed on another property. And Golden Lane Housing has asked Assets Exchange to put an offer forward for a 3-bed property in Chesterfield. So definite options. And then the other option you can also do, and I'll just log in and show you, is you can go to an auto invest product where you don't have to worry about the cash drag, such as LoanPad. See what's going on in their statistics right now. Generally, every time I've looked for the last since 2019, there has been no issues getting money invested. You can see here, estimated time to invest less than 1 day. So while again there is no guarantees with these companies whether you can get your money deployed or not, there are definitely potential places where you can put your money and not have to worry about cash drag. Places like Blend Network and those more popular websites like Propland, Blend, sometimes Assets Exchange. Yes, the loans do get deployed quickly, so it just depends. You're going to have to look around. But yeah, plenty of options out there to get money invested into these peer-to-peer loans. And I think also what will happen when interest rates get cut, just guesstimating here, but I think you're going to see peer-to-peer being way more competitive than savings accounts, and likely it'll become more popular, so maybe more difficult to get money deployed. But right now, with interest rates remain at the level of where the Bank of England just froze them at, there's still plenty of availability. Let's have a look and see if Propland has anything. I think the last time I looked, they had a little bit of something on their marketplace too. Have a look. I've been logged into Propland for a while. Loans. Yeah, here's something right here. Let's see what's in there. Amount available, £5,000. So yeah, if you're looking for something right now, there is something in Propland's marketplace. So not a lot, but just this one loan. Speaking of Propland, they sent out an update. This was the June 2024 newsletter. They talked a lot about AI. I'm not going to go through this. It was how AI can help property developers. But I just wanted to go look at their statistics, and I did notice that right now they have, out of 79 active loans, 77 paid monthly interest, 2 from interest reserve. So we have now 4 loans past due, which has gone up a little bit. I don't know the reasoning for why those loans are past due. Maybe people who invest through Propland do know, but I did take a look at their loan book from February of 2024 and noticed here that they had 1 loan past due. They still had 2 paying from interest reserve. So 1 loan past due in February. So just 3 months later, and we now have 4 loans past due. Again, not saying I know anything about why that is, but it is something to keep an eye on. Prefer that number to be 0 or 1, but right now it is 4. So we have 4 commercial mortgages and 0 bridge and VAT bridging loans. I see those things have not really been particularly available. I guess they're just not getting a lot of those loans to be able to put on the platform. So Propland, for the majority, is doing what they have always done, which is commercial mortgages. So 4 loans past term with them. Also, Blend put out a property pulse that came out, some pretty interesting statistics about the UK housing market. There's a lot of news about the UK housing market, especially. Oh yeah, we had did we have something important happen yesterday in the UK? A whole brand new government after 14 years of conservative rule in the UK. We now got the Labour government. So a lot of eyes on the housing market now because Labour has promised some things that they would like to change about the housing market. So on Blend's Property Pulse, we see here, it says the widely watched nationwide house price index showed UK house prices continued to witness some momentum seen in recent months, including a 1.5% year-on-year increase in June. Property prices still continuing to go upwards. That said, housing market activity has been largely flat over the last 12 months, with the total number of transactions down by around 15% compared with pre-pandemic levels, so things normalizing, I would say. Pre-pandemic levels were a little bit more hot in the housing market. Residential transactions involving a mortgage are down even more. That's pretty concerning, nearly 25%. So is that because of high house prices? It's probably a mix of cost of housing, higher interest rates, and also availability, just the lack of affordable housing that exists in the UK. By contrast, the volume of cash transactions is up around 5% compared to pre-COVID levels. Housing affordability remains a challenge. Northern Ireland remains the strongest UK region in Q2. Prices up 4.1% year on year. That's pretty crazy. Prices across England gain momentum compared to Q1, plus 0.6% year on year. And Wales and Scotland both saw a 1.4% annual increase. The picture of a stronger north and a weaker south is reflected in data by Rightmove. So this seems like the north is doing better than the south. Again, just to probably highlight the affordability issues that are happening in the south of England. It's very, very expensive to buy property down there. Of course, the big question hanging over the property market is the results of today's general elections. According to Rightmove, the majority of buyers and sellers will continue their plans to continue forward with their purchases. You can see here the average UK house prices. Imagine being able to buy stuff at June 2014 prices on average 190, spiked to around 270, and now dip back a bit, and you're a little bit close to 260,000 pounds. So smart statistic, the rebound continues. House prices, units continuing to plummet. According to the Home Builders Federation, the number of housing units achieving planning permission was 236,644, down 13% year on year, the lowest 12-month total for almost a decade since Q3 2014. So that is definitely not helping things. And, it's not surprising with planning permission. It's just so hard to get through nowadays. In the UK, that obviously is going to make house prices difficult. Now, why do you care about this? Number one, you should care because this affects the flow of deals that come onto peer-to-peer lending platforms for you to be able to invest in. I presume that's one of the reasons you come and watch this, because you're interested in peer-to-peer lending. Big question is what's going to happen now the Labour government has got into power. Is anything going to happen? That tends to be my experience with political situations. The governments promise things that actually ultimately don't get delivered. So will things change with the UK's housing situation and the amount of affordable houses that are built upcoming? I don't know the answer to that question. I would say if I had to take a guess, you can come back and yell at me for this, but I'll say no. Things won't actually change because there's too many people opposing too many different things. I hope it does change. I hope there's planning permission reform and that affordable housing is offered to people that need it. They really do. Another article on our friends over the Alternative Credit Investor website talking about the positive impact with peer-to-peer lending on UK properties. This was a panel that they had a few weeks ago. It had Narinda from Cufflink and a few other people on there. So it's an interesting watch. If you want to go back, you can find it on their website. They have a link to it. But the panel was focused on the UK property market and investment opportunities within peer-to-peer lending. The UK property market is in the midst of a long-awaited recovery. According to Frank Knight, house prices are up by about a fifth since the last general election. However, challenges persist, including affordability and lack of new housing and high interest rates. And there are costly delays in planning permissions and the limitations of regulation. Yeah, I mean, planning permission delays end up really costing builders a lot of money in delays. A couple of the panelists we had, Narinda's Cufflink. Sorry, I got that the wrong way around. Cufflink's Narinda. A broker at Tapton Capital named Andrew, and Anna Ward, associate and senior analyst at Frank Knight, and moderated by Susie Newrith, who we've had on the stream. Go watch that if you haven't seen it. Ward said affordability is a hot topic. Both Labour and Conservative have promised to ramp up house building. How realistic is that? Meh. We've seen planning permissions fall to a decade low, honestly because people are tired of having to deal with these local councils and planning. It's kind of a nightmare. Narinda said from Cufflink that he agrees planning permissions represent one of the biggest challenges for the peer-to-peer lending property market. The government has set a target of building 300,000 houses per year, but this target is unlikely to be met. Narinda said, we're working with a number of developers who are having major challenges with council planning rules. Imagine that. The planning laws need to be changed. In June 2024, the Bank of England maintained the base rate at 15%. Oh, no, sorry, not 15%. 5.2%, which is a 15-year high. Higher rates mean higher costs for borrowers and higher returns for investors. Narinda urged investors to look beyond the interest rates on offering when choosing which property loans to back. He encourages diversification. Alternative Credit Investors survey found that investors are largely in line with Narinda's philosophy. Just 38.1% of respondents said the higher interest returns were the most attractive elements of an investment. Instead, these investors value data transparency and diversified risk above everything else, with collateral and the reputation of company management also scoring highly. And when asked to predict what the next 12 months had in store, the panelists were circumspect. That's a big word. One of the panelists said, I think the sector is going to be fairly buoyant. I said flamboyant. Fairly buoyant. If we get interest rate decreases, it's going to help the viability of schemes and the affordability for the end purchaser. Of course, that makes sense. And Narinda from Cufflink said, if we're going to see any growth, it will be steady growth. I do still think there will be an interest rate cut, but I think it'll be more or less the same. So there you go. I mean, yeah, I think rates are going to get cut eventually this year, probably by a small amount. Yeah, and there's, again, questions about what exactly is Labour going to do about house building support. One of the interesting things I read was the Washington Post did a little article about Keir Starmer. Keir? How do you say that? Is it Keir? I keep reading Keith, but what do you guys think about this guy? I don't really know much about him other than what I've read over the last couple of days. I tend not to get into politics too much, but I'm interested to hear what you think about the new prime minister. I know he was a lawyer and his wife was a lawyer, and now, his wife works for the NHS, right? But one thing that he did say, let's pause that. One thing he did say down here was he wants to help young families get their first mortgage, knowing that his parents' modest semi-detached stucco home was everything to his family. It gave us stability, and I believe every family deserves the same. So apparently he came from a pretty working class family. But what's next for UK housing? Again, we've seen the population getting older, according to data. This is on Lendinvest's website. They had a blog post recently about what's next for the UK housing market. Again, this completely affects peer-to-peer lending in so many ways because nearly all of the peer-to-peer lending companies nowadays are lending money on property, UK property, which is going to affect your investment. This is the Capital Raising Associate Director, Sam Woodward. He's saying that the population age 65 and over last March was 18.6% of the country, and that is up from 16.4% in 2011. So the population is getting older, saying many older borrowers now live alone, one-person households. The second most common type of household, accounting for almost 1 in 3 of UK households in 2022. That's 8.3 million households, and the majority of these, well, 53%, small majority, but they are women living alone, and 70% are women over 65. Labour says they're going to have a new approach to planning. Planning blockers need to be readdressed. The party promises to restore mandatory housing targets. And ensure planning authorities have up-to-date local plans that will fund additional planning officers and, when necessary, make use of full intervention powers to override local community objections and build new stock. They also promise to build a new generation of towns that, alongside urban extensions and regeneration projects, will form part of a series of large-scale new communities across England. How do you feel about that? Is that really going to happen? They're also going to be fast-tracking the approval of urban brownfield sites. Interesting. They are going to try to get more houses built. I think they're about 300,000, 320,000 or something like that is what they're looking for. But who knows, again, whether these proposals are actually going to happen is just the big question mark. I don't know. I always find, again, politicians, to get themselves into the positions of power, they promise a lot and deliver very little. But what do you think? Vanguard, they put out an interesting article, Why Investors Should Ignore Election Noise. This is very poignant. This is for people that try to, time the market. They get worried about what's going on, get scared to invest. And Vanguard shows there's no statistical difference between election and non-election periods when it comes to returns on stocks and shares portfolios. So that's pretty interesting. They looked at portfolio performance in the period of the 5 months before each election to the 5 months after. They found no statistical difference in portfolio performance. The annualized compound return for election periods was 7.8%. During other terms, it was 7.3%. And that's a performance of 60% shares and 40% bond portfolio. So if you're waiting around to invest because of the election, they're saying it's not going to really make any difference. Markets tend to disregard UK elections. It's a pretty good article. You can Google it. Why investors should ignore election noises on Vanguard's website. I can post the link when the stream's over in the description if you want to go read it. But yeah, they're basically saying timing the market is futile. Here they say that right here. And they show statistics why, and they look back to 1980. So they have a lot of data. Speaking of the index tracker of Vanguard, look at this price of where this thing has gone. £953.75 as of yesterday. And this is just why investing and just continuing to invest and buy and holding in an index tracker is so powerful. If we look at the historical prices, say from just even, like we had 10 years ago, let's see where it was. Let's go January 1st. I got to scroll back 266 pages. I'm going to do this for you. I want you to see just where this index tracker has traveled. I might not go. Let me see if I can click this faster. It's like playing a video game. I might only go to 100. Look at those numbers just going down. If you'd have just put your money in, let it sit. Key guy. We're down to 400 pounds per share. Key guy. Remember, this is going through the pandemic issues of 2022. We're back in 2015 now. There we go. Almost there. I have a sore finger now. 224 pounds and 83p on the 2nd of January 2014. So 3x. It's more than 3x, right? Is that 4x? We 4x since 2014, just in an index tracker that you could have just let your money sit. Not done any trading like I did on the Trading 212 portfolio, which is a terrible idea. So from 224 in January of 2014 now to 953, and we're going to eclipse this 1,000 pound price point soon enough. I don't think it would take much longer, another month or so, if the markets are playing ball. And for low fees, pretty amazing. Look at this chart. All the way, if you look back to 2019, here's where we had the pandemic drop in March of 2020, and it's just continued to really rage forward. A lot of people saying, bubble, bubble, bubble. Who knows? We have no idea. Trading 212 portfolio, let's see where we're at. 22,302 pounds. Taken a bit of a hit on Coinbase, as if you follow the price of Bitcoin, Bitcoin has been having some challenges, but we've had a look at this volatility today, from 224 all the way down to 209 and then back to 223. It's kind of crazy, but we've had, let's see, 1 month, it's really not been that bad, 3%. Down 11% for the last 3 months, but we're still in the green. Creative Realities, this thing has been just bouncing all over the place too. Last month up and down, not really gaining much, but still in the green. And then today we added Mobile Eye Global, made 1,000 pound entry position into this. What is that? They are a company that founded a single idea that was quite radical according to their website. It was an inexpensive sensor, a camera for automated, well, I wouldn't say autonomous, but basically driver assist. They're a technology company based in Israel. And yeah, I did a little bit of research. I don't want to go into all of the reasons why I added this, but they've been given a nod from Volkswagen. You can see what the type of camera, what it does with the camera systems view. This is LiDAR, so this is a lot of things that companies like, I think Tesla are using LiDAR, but they're using something that's supposed to be more accurate and safer to try to make autonomous driving a real thing. They have a ton of cash on their books. Look at this, 1.2 billion US dollars in cash, with zero debt. Profits have been kind of up and down, but because they've got such a strong balance sheet and no debt, this is a bit of a stab in the dark with this one. I think it's probably going to be volatile, but I've seen some price targets on this stock in the $40, $50 range, so not financial advice. Please don't follow what I've done. But we added this position today. It's up about 1.14%. That's even after the fee. We had to pay an FX fee on that, so that's been added. I may add some more to that next week, we'll see. And then Nvidia, still going strong, up 34%. Rivian is clawing its way back with in the negative 4%, so better than we've been when we were down here in the $10 range, so it's made some ground. And then Valco Energy's kind of still ticking along, up 36%. So yeah, portfolio is definitely in a very, very good position. And we'll see what happens with this new stock position. Goodness. I don't know if we're going to... Gosh, I got a few more interesting things here. Bitcoin's price. Of course, you know, I'm a bit of a Bitcoin fanboy. Does that mean I own any? I don't know. Maybe. Maybe not. Price. $56,519 US dollars. This thing has been taking a bit of a hammering. It's down about 30% since its $74,000 high, which some people will say, well, you know, Bitcoin sucks. But I say maybe this is just a buying opportunity, because we've seen this happen so many times with Bitcoin up and down, up and down, up and down. Couple of things that have put pressure on the Bitcoin price, even though I don't think it's that much, because U.S. governments have sent $738 million in Bitcoin to exchanges to sell over the last 2 weeks, so that's affecting the sentiment. I don't think that would really mess with the price that much. I mean, it's kind of a small drop in the 1.2 trillion US dollar market cap that Bitcoin is. 738 million doesn't move the needle that much, but then you got this Mt. Gox people who are invested in this bankrupt platform, had Bitcoin that went under a long time ago. They're finally getting paid back, so they've sent billions of dollars of Bitcoin out to these investors who used to own this Bitcoin, and now some of these people are going to sell, or the sentiment is that maybe some of them are going to sell, so it's putting some pressure on the price of Bitcoin. They are going to send out $7.6 billion of Bitcoin, so 140,000 Bitcoins and 143,000 Bitcoin Cash tokens, 42 million. And then they moved about 2.7 billion from cold storage to investors' wallets. So there's, again, people believe that's why this price is having some tricky times at the moment. But when in doubt, look out. I don't really think it's a big deal. What else do we have? Let's see. I thought, yeah, this is a good graphic right here. By the way, if you like the stream today, hit that thumbs up, please, if you can. Same story every Bitcoin dip. I love this picture. 74,000 US dollars. Everybody's lining up to buy, but when it's 61 or less, nobody's buying it. It's always people come in when it's going up, and nobody buys when it's going down, which is completely the wrong way of investing that you should be doing. When everybody's leaving is a good time to be going in. I think so, anyways. A couple of interesting pieces of news. Tennessee woman awarded $700,000 US dollars after being fired for refusing COVID-19, a little jab in the arm. So she worked for a health insurance company, Blue Cross Blue Shield of Tennessee. She was fired. She didn't want to take the you know what, because she said it went against her religion, and then she got fired for not taking it, and now she's gotten herself $700,000, which I think is a good thing. Also, lab-grown meat has been banned in the state of Florida. They grow this meat in petri dishes. And look at this. It's basically fake meat. Well, I guess it's not completely fake. It's actually real meat that's cultivated and grown in steel tanks using cells from a living animal, a fertilized egg, or a storage bank. The cells are fed with special blends of water, sugar, fats, and vitamins. Once they're grown, they're formed into cutlets, nuggets, and other shapes. So that's been banned. The governor of Florida said, "No, we don't want that here." Kind of crazy when you think about. I don't know. What do you think about lab-grown meat? Is that something you would eat? I do feel a little bad for the animals that are getting sent to the slaughterhouses. I think some of us probably wouldn't eat the meat if we had to endure what went into actually killing the poor things to get cooked. But so I don't know. I don't know about that fake meat though, or that lab-grown meat. Let's see if there's anything else. I found this interesting website. It talks about the cost of living in the UK, and tell me if you think this is accurate. But it says a family of four estimated monthly costs are now £2,747 without rent. Cost of living in the UK is on average 11.2% lower than in the US, and rent in the UK is on average 24.8% lower in the US. This basically is showing that the cost of living has gotten way more expensive, not only in the UK but in the US. But I think some of these numbers are a little bit off. It says meal at McDonald's, £7. I heard it was a lot more expensive than that. Domestic pint of beer, draft, £4.50. Is that true? Rice, $4.68. Yeah, if you want to read these numbers, it's really interesting. It's a website called Numbeo, Numbeo. You can go ahead and read about all the different costs of living in the UK. Apartment, one bedroom in the city centre, £1,062. So it has a kind of an average here from $750 up to $2,156. Obviously, places like London going to be a lot more expensive. And basically, this is just people contributing to these numbers and edits. And yeah, I was reading about kind of what the cost of food prices are now in the UK and then the US are saying. This is a bit of an older article. Oh no, this is January 30th. Prices in the US, average cost of food, £5,259 annually, £438 a month. In the UK, tell me if you think this is accurate too. I think this is just really low, especially now, but it says the average cost of food per person in the UK is about £45 a week, £194 a month. That just sounds crazy to me. I think it's a lot higher. And I found this article, this was from 7 years ago. It's called What Families Around the World Eat in a Week. And it's really interesting. It's on steemit.com if you search for it. Weekly grocery costs. It shows you in each country what, and this was, I think, imagine 7 years ago how much this has changed now. Australia, it shows them buying a week's worth of food. Look at all that fizzy drinks on the back. That's not healthy, Mrs. Australia. Look, well, I'm seeing a bit of a link there to what they're eating and maybe the health of the family, but we'll see. Norway, $3.79 a week. Bhutan, family of 13, about $5 a week. Amazing how things can just be so different prices where you go in the world. Greenland, $277. China, 155 a week. I'd be interested to see what those prices are now. I bet they're at least doubled. I don't know if it has the UK on here. 341 in the US, so I think it's a lot higher now. Yeah, it doesn't have the England. It says finally in Spain, my husband and I spend about $47 a week. That's the pinch of inflation that has gotten higher and is all biting us in the rear end, unfortunately. But I think that's the new norm, and I've just come to accept that's the way it is. Things are costing more nowadays. That's why you got to take your money, and if you have money sitting around in a bank, don't let it get eroded by inflation. Put it somewhere, whatever that is for you. Let's see. I can't stop looking at this this Mobileye Global. Look at this, 3% up today. This is, by the way, this is just blind luck. If I had to take a guess tomorrow, or on Monday, this share price is probably minus 5%. But we're gonna stick through it for the next 2 months, probably, and see how the stock does. Anyway. It's 3:24 here in Orlando. What time is it in England? 8:24. I'm going to let you go so you can go get your dinner or go to the pub, go watch the football. Just remember that, those dates that I told you about. Next week I'll make a graphic and write them all down, plan guests. I'm going to be putting a new video up live in the next, probably tomorrow it'll be up. which is the Peter Wilkins from a cufflink that we did a couple of weeks ago. I just had to get the thumbs up on it from compliance. But we talk about asset management. So he does asset management over at cufflink. So go check that out. I'll send out an email, let you know when it's live if you're signed up to the email list. But I think that's going to do it today. I need to go. It's a holiday here, technically, but not really. So I'll see you guys next week. From myself and Harley, the official dog of the Financial Things stream, and from Cufflink, our amazing sponsor. Thank you to everybody for joining this evening. Hope you have a wonderful weekend. That's all I got for you. I'll see you next time, okay? Take care. Bye.